All right, let's just jump right in because we need to talk about what's happening in the markets. It is absolutely wild. You've got stocks, gold, silver, copper, you name it, it's probably rallying. It feels like a full-on party, but here's the thing. Just a few months ago, everyone was getting ready for a massive recession. So what on earth is going on?
And that brings us to the big central question of this whole explainer. How did we go from near universal fear of a recession to markets that are literally knocking on the door of all-time highs? It's like the entire narrative did a complete 180, and we're going to break down exactly how that happened.
I mean, just look at this contrast. It is night and day. Back in April, the only thing you heard was recession is coming. There was genuine extreme fear out there. Now, fast forward to today, we're talking about brand new highs. But the craziest part is that even with this huge rally, sentiment is just neutral. A lot of people are still on the sidelines, totally missing out.
And how big of a party have they missed? Well, since those lows back in April, the S&P 500 has ripped higher by an incredible 43.75%. So much for that recession, huh? This wasn't just a small miscalculation by the experts. The consensus was completely, utterly wrong. So what was the secret ingredient they weren't paying attention to?
Well, it all comes down to this one simple concept: a massive, behind-the-scenes engine of liquidity, a huge injection of cash into the financial system that's been fueling this entire move. Let's take a look at how this machine really works.
So here's the crucial detail. While everybody was glued to their screens, analyzing every little piece of economic data, they were looking in the wrong direction. The real story wasn't the economy itself. It was the central banks quietly turning on the money spigot. That changed the entire game.
And to put a number on it, the Fed has started buying up $40 billion worth of short-term government debt, Treasury bills. Now, what this does is it effectively swaps debt for cash, pumping that brand new money directly into the system. And all that fresh cash, it has to find a home. And it's been finding a home in assets, pushing prices way up.
And don't think for a second this is a one-and-done deal. Oh no. There are some really powerful reasons to think this is just getting started. A growing economy just needs more cash to run. The government has a mountain of debt it needs to sell. And if other central banks around the world get tight, the Fed will probably step in to pick up the slack. The money printer is definitely on.
Okay, so that's the theory, right? More money equals higher prices. But where's the proof? Well, we can see it plain as day when we look at which parts of the market are now leading the charge. And the answer tells us a really important story.
You know, for months, it was the Magnificent Seven show. All the big tech stocks just carrying the entire market on their backs, up a crazy 67.5% since April. But something important has changed. The rally is getting wider, new leaders are stepping up, and that points to a much, much healthier market.
Take a look at the Russell 2000 Index. This is where you find the smaller, more Main Street type companies. It's up nearly 41% and hitting new highs. Now, why does that matter so much? Because when these smaller companies are doing well, it's a huge vote of confidence in the strength of the entire domestic economy.
And it's not just the little guys either. The Dow Jones, home to America's industrial giants, is also breaking out to new highs, up 33%. So you see the pattern here? The foundation of this rally is shifting from just a handful of tech stocks to basically the whole economic engine.
Now, if the economy is really getting stronger, you'd expect to see it in the price of the raw materials that build everything, right? So let's pivot and look at commodities, because they're an amazing crystal ball for what's coming down the road.
And when you talk about economic crystal balls, there's one that's more famous than any other: Dr. Copper. Yeah, that's its nickname. Why? Because the price of copper is so sensitive to what's happening in global manufacturing that it's said to have a PhD in economics for its incredible ability to predict where the economy is headed.
So, what is Dr. Copper's diagnosis for us right now? Well, it's a big one. It's breaking out of a huge price pattern that it's been stuck in for years, since 2021. This isn't just some small move. The chart is practically screaming at us that a major economic acceleration is likely on the horizon, maybe around 2026.
Okay, so let's tie all these threads together. We've got a fire hose of cash flooding the system, a stock market rally that's getting broader and stronger, and commodities that are signaling a future economic boom. So the big question is, what could all this mean for an asset like Bitcoin?
I mean, that's really the key question, isn't it? When you create this much new money, it doesn't just disappear. It has to flow somewhere. And in a world where there's more and more paper money, assets that have a truly limited supply suddenly become very, very interesting.
And this is where the bullish case for Bitcoin starts to look pretty compelling. We know from history that it tends to react to these big cash injections, usually with about a 90-day delay. We know the system is getting flooded with cash right now. And we know for a fact that Bitcoin's supply is fixed. It's just been sitting there, consolidating, building a base, almost like a spring being coiled tighter and tighter.
From a pure chart perspective, all eyes are on one specific number, $94,500. You can think of this level as a giant wall of resistance. If, and it's a big if, it can decisively break through that wall, that could be the trigger that signals the next major leg up has officially begun.
And if it does manage to break that resistance at 94.5, the structure of the market suggests the next logical stop, the next big psychological target, is $100,000. That's the scenario that's looking more and more plausible by the day.
So we end up right back where we started. The recession that everyone was so certain was coming never showed up because the money printer got turned on. The market has been celebrating for months, but a huge part of the world is still standing on the sidelines in disbelief. The question now is, with this much cash flowing into the system, is this just the beginning? Is the real party just about to get started?